From Vox Markets, I'm Francesca Morgan, and today I have East Imperial. I have with me Andrew Robertson, the CFO, and Tony Burt, the CEO and founder. Thanks for joining me today, guys.
Thank you for having us.
No problem. Now, just for investors who are unfamiliar with East Imperial, could you just tell us what the company does?
East Imperial is a premium beverage company. We started here in New Zealand in 2013. We're now established throughout the Asia Pacific, the US, and pockets of Europe. We create world-leading, award-winning mixer range, which is naturally low in sugar. They come in multiple formats, cans, bottles, and we've found some of the world's leading hotels, bars, and restaurants.
Amazing. Now, you mentioned that Asia Pacific, this region, was kind of the cornerstone of the company and its brand story. How has this evolved since the company's conception?
Yeah, I mean, where we're actually geographically located, it made sense for us to focus on the markets which we have easier access to. Obviously, it's an advantage to us over our competitors as well, access to those markets. But also, it's central to the brand story in terms of, Asia is the home of gin and tonic. It's where our ingredients come from as well. And obviously, it's hard baked into our branding. It's East Imperial. It's a celebration of the East. So, I mean, it always made sense. And now we're fiercely proud of us being an Asia Pacific brand, and obviously now being competing on the world stage. So it's incredibly important to us. In terms of sales, it's been somewhat skewed over the last couple of years, particularly during COVID. That APAC has made up a larger majority of our sales. This region has, but prior to COVID, it was around about 50% of our sales. But what we are pleased to see happen now is the US reopens and Asia, although it's been a little bit slower. Obviously, China's still shut, and so is places like Hong Kong. We are starting to see a return to that kind of contribution being around sort of 50% of our market. So it's incredibly important to us. And, we recently we announced late last year a new distribution agreement with SUTL Group based in Singapore. But that's just not for Singapore, that's for the wider Indo-China region. We're also working very closely with our advisory board, and particularly Horace Nye, who's based up in China, and working on our Chinese strategy as well. Although we're already sold there already, we're working on that. We'll have further news about that later on this year.
And as it stands, what does this market look like now in terms of size and expected growth?
Well, Asia Pacific, I think all of us are fortunate enough that, this whole idea of premium products and premiumisation, particularly in spirits and mixers, is just continuing unabated. Even COVID hasn't slowed it down. So that's really positive for not only us, but the entire category. Asia is no different. We're seeing it throughout places like New Zealand, Australia. Singapore's always been a real it was our first market we ever sold was Singapore, so it's always been a very cornerstone to the brand. But we're seeing it throughout the region, which is really positive. But as I said earlier, and as everyone knows, it's well documented, tourism has been hit hard throughout the region, but it's starting to return now, which is really encouraging to see.
And you talk about this demand for premiumization, which is clearly underpinning your strategy. Can you tell us what you mean by this exactly?
Yeah, it's been something which has been around for a long time, and I guess it was really the catalyst for starting the brand in the first place. It was the idea that people are actually demanding products which are just that little bit better. People are becoming more discerning. People are asking questions about their products. They want products which have genuine sort of brand narrative to it and stories behind it, and wanting to know where the ingredients come from. So that was really the idea behind the brand and the genesis behind the brand, really. Early on, we thought that this was just the beginning, and this is going to become more and more. And the example I use a lot to people is when we first started selling this brand, back in 2013, 2014, the conversations we were having with food and beverage directors was more around post-mix, the gun versus bottles.
Right.
We don't have that conversation anymore. And I think it's a really a testament to the whole category itself has sort of just premiumized that whole bottle service part of the business. So, and we're just seeing that continue. And that's what we mean by premiumization. It's just people becoming more discerning and demanding better products.
And on a sort of more general sense, how would you say the drinking experience has evolved globally? Because, a lot of people don't know how to characterize it.
Yeah, it's different in every region, right? This whole premiumization trend is is everywhere. We see it in every market we operate in. But in terms of drinking trends, they're different. Like, California, we see a real wellness trend washing through areas of the US, for example. People demanding lower sugar, no sugar. So as a result of that, we've got products like soda water, which are in high demand in those sorts of places. But yeah, it's constantly evolving, and there's constantly different trends happening. We sort of picked up, 5 or 6 years ago, for example, that yuzu was being used more and more, not only in culinary circles, but mixology circles as well. And so we created a yuzu tonic, right? So we're always looking what's going on. And I think another great example is our coffee and tonic. Cold brew coffee or coffee fortification and cocktail culture is a big trend at the moment. The most obvious one being espresso martinis have just, exploded everywhere. And so coffee's been used more and more in cocktails. And so, again, it was just a natural extension of us to be able to offer Sumatran cold brew coffee with pomelo and put it in a can, for example. So we're constantly looking at these trends and how it evolves and ensuring that we've got the products to meet that demand.
And are there any other similar untapped markets that you're eyeing up? Like you said, the cold brew coffee market, considering it's a sort of, as you say, like a patchwork and varies region to region. How do you prioritize which is a market you enter?
I think what's important, we're just not a tonic brand. 50% of what we sell is tonic water. The rest is made up of our recently award-winning colas, our ginger beers, our ginger ales, more for the dark spirit side of our business and dark spirit strategy. So that just can't be ignored. I mean, it's a huge part of our business. But in terms of other SKUs, we've got a couple of other things in the pipeline, which we'll announce over the next coming 6 weeks or so. Really, will be the first one coming out. But we've got some new products coming out, which is, again, just extending the range. In terms of moving outside of mixers, as I said, our first foray to do that was coffee and tonic. It's something that we wanted to try. It's a brand new category. There really is no other players in that category. So we're kind of one of the first movers in that space. But, the response we've had so far has been brilliant. So we'll just continue to evolve and see what's going on in the market and ensure that we've got the right products.
Now, in terms of how the company's progressed since floating last summer, you published your results last week. You reported a pretty strong start to the year, and that being in line with your expansion plans. Could you just take us through these highlights of the results?
Yeah, well, I'll tell you a little few things about, since listing. We've managed, despite COVID, to get a lot of things away, and I think that's just testament to the team and the hard work we've done. And it hasn't been easy. I know it's been played a lot, the card of COVID card, but it's been very real for us down here in New Zealand, not being able to travel for 2 years. We were just recently up in London, but it was the first time we could travel in 2 years, and so all this listing process and has all happened pretty much over these sorts of Zoom calls. It's an incredible amount of work and for the whole team. But in terms of what we've been able to deliver, I think it's really been, this business is all about distribution and being able to supply. It's the biggest news for us was the national distribution deal in the US with RNDC, and RNDC are the second largest distributor in the US. And I think what's really interesting is what we're seeing in that market. There's been a bit of consolidation in the US with distributors. So there's 3 major distributors in the US, and each major distributor now has a premium mixer in their portfolio. One being a British brand which we know of, it's obviously ourselves, and the other being an American brand. And so it feels to us that the battle lines have been drawn, or the drawbridges up, how you want to describe it. But we are seen as one of the big players there now, and we've got a brilliant opportunity now to really roll out in those initial states. And on the theme of distribution as well, I think the other one, as I mentioned earlier, was the SUTL group. I mean, that was a big win for us as well to get that away. Initially in Singapore, we're seeing Singapore coming back now, which is really, really positive as that reopens. But also the opportunity now to reach further into Indochina. And as I mentioned earlier, APAC's really crucial to us. And so having a really strong distribution partner to open up those markets to us is key. So we managed to get that away as well. We talked about the coffee tonic, around the innovation of that. It wasn't just a coffee tonic we managed to deliver. It was also the canned format, which is obviously an important prerequisite for a lot of other things that we've got going on in our strategy, mainly, one around sort of direct to consumer Being able to send cans is a lot easier than sending bottles and breakages and what have you, but also for certain channels as well. So the can format has done really, really well for us since releasing those. As we said, and I'll probably hand over to Andrew to talk a little bit more about the results, but, being up, 62% last year and coming off the back of COVID, I think is really very positive for us. And that momentum we're pleased to see has continued into 2022.
And you talk about, oh, sorry.
You go ahead.
No, I was just going to say, you talk about the sales growth, which I think is more weighted in the second half. Now, these are across your key markets. I know you sort of touched on this, but could you specify what these key markets actually are?
Yeah, well, obviously the US, as we've said, New Zealand, Singapore, Malaysia, Hong Kong, China, and we do pockets. I know we'll come on to it in Europe, which has been really, really positive, surprisingly good for us going into 2022. And those Scandinavia, the Netherlands, France, Italy, Hungary, Czech Republic. So we're not completely out of the loop with what's going on in Europe. But again, it is the other side of the world for us. So to service that from New Zealand with the current supply chain challenges is challenging. But we're managing to do it. But those are our main markets at the moment. And as I said earlier, the focus very much is continuing to grow in Asia Pacific, but also this US opportunity, which has fortunately presented itself to us.
And in terms of growth, off-trade versus on-trade growth, can you just say how these differ?
Yeah, I mean, historically, we've been very weighted towards on-trade. Prior to COVID, 100% of our business in North America, for example, was on-trade. We didn't do any retail business or off-trade, as you mentioned. But we've just like a lot of businesses, we've had to change our strategy and adapt to the new challenges. And so we've gone into sort of premium grocery, specialist grocery, and premium sort of liquor outlets, both here in Australia, New Zealand. And now, off-trade is making up a significant larger portion for us in this region now that we've entered those channels. But again, there's a great opportunity for us to extend that. We're starting to do that now with our new distribution partner in Southeast Asia. And obviously we started to do that now in the US as well. So, I think prior to COVID, about 10% of our business was off-trade, 90% was on-trade. So, we want to probably get that to be about 60-40, where we want to be.
And can we just touch on the financials? You've said you've maintained a strong balance sheet with enough cash to fund your expansion this year. So can we touch on this and what your strategy will look like around this?
Of course. I'll hand it.
Yes, so I think we've probably seen we've used a bit more cash than we had anticipated into the sort of first quarter of this year. And that really was building of inventory ahead of this national distribution deal in the US. Wanted to make sure we had enough stock in place to satisfy that early demand. And also we built inventory ready for that Northern Hemisphere summer. So we've got feels like at the moment our inventory position is probably 30% to 40% higher than we traditionally run. So we've got some scope to start to run that down and right we are on cash. We run a very lean business, so we're not cash heavy. It's really about investing in inventory and also supporting the market growth, which we're now focused on.
And cash burn since your last fundraise seems particularly rapid. Will this continue?
No, it won't. As I just sort of said, we're a lean business, and a lot of that early cash burn went into inventory build, which we're now writing and starting to run that down. So we can run it run about a third of that back, which will help write that cash position. We don't see a need to raise any more money based on our current plans. We'll go back to the market to raise money. If we were to see a larger opportunity in the US to go wider and faster, I think that's an opportunity to go back to the market and say, look, we've proven the first 11 states we've implemented. There's an opportunity with our national distribution partner to go a little faster and a little harder. That would be a time we potentially go back to the market and raise some more cash. But to complete what's in our current plans, we have the funds in place.
Mm. And you talk about these US expansion plans. What do these look like now as it stands? And is this your core focus?
Yeah, it's one of our key focuses for sure.
2022, absolutely.
Yeah, for 2022, absolutely. I mean, we just did an announcement today on our website about some of the key hires we've got there. So we've got we're starting to build out our team, regional sales directors, to support that rollout in those 11 states. The strategy is very much building, or Mark, who heads up sales office in North America, Mark Zongetti, to build out his team. And we're getting some great professional, experienced sales guys that have been doing it for a long time in that market, and already kicking some goals now already as well. So it's hugely exciting for us, and it's the first time we've had salespeople on the ground in the US, and building up the sales team. So we are very much, as you said, focused on getting this US onboarded and going. And again, we're in the Northern Hemisphere, we're going into the warmer months now. So traditionally, this is where we'll see high demand as well. And the timing's been really good. And as Andrew said, we had to kind of forward, build stock for that demand, hence the cash burn first part of the year.
Yeah, I think the sales team is very important, aren't they? They work very tightly with the distributor. The distributor won't, whilst they provide the network and access, and they have their sales teams. Our sales team needs to work very tightly with them to help both them and us succeed. So it's really important that we've now got this team in place.
And would you say a UK launch is on the cards at any point?
We get this question asked us a lot. Yeah,
we're excited.
Yeah, definitely. It's definitely. And I know I was just saying to someone earlier in the office here today, I get probably 4 or 5 emails a week from people asking us when you're launching in the UK. We will do it, and I say we will do it, but trying to move product from New Zealand to the UK now is probably the worst possible time to do it. It's ridiculously priced to get containers up there. So what we're actually looking at, if we are to come to the UK, we're speaking to a cornerstone hospitality group there. We've become a cornerstone customer for us in the UK in the Ontrade. We will look to bottle closer to market when we do it. And otherwise it makes very little commercial sense to keep shipping water over water to the UK when we won't make any money on it. So we're just trying to get to get it right and not to rush into it. But rest assured, we will be launching in the UK.
That's great. And just to round off, what does your outlook look like now? What would be a successful year and beyond for you?
Well, as I said, I mentioned earlier, I think this US thing is absolutely pivotal and key to us, and so we're working hard on that. We're getting a great team, as I said, together to help us deliver it. To keep working in Asia Pac. There's a lot more opportunities for us wider in the region, including China. We're already in China, but going deeper and wider in China as well. So our focus on the outlook is very much on the Asia Pac, that US part of the business, and as I mentioned earlier, committing to actually doing a UK launch in the outlook.
Great. Well, Andrew and Tony, thank you so much.
You're very welcome. Thanks for having us.
Appreciate your time.
Cheers.
Thank you.